Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a 2-hour chart. It's a bit squashed up, but I just wanted to bring in the bigger picture to have a bit of a chat about that. Obviously, this pattern here that we've been working with is we're considering this a wave four, and we're pretty sure about that. However, wave fours are always complicated, and at this stage here we've got the wave four to this point here, but it is possible that this is the wave four over here as well, in terms of an A and a B and a C wave for the A wave, and then an A and a B and a C here for the A wave, a B wave and a C wave here for the bigger B wave. So basically an A and a B, and we can get a C wave back up into this area here. And this correction here kind of suggests that that's a possibility. We can't rule it out, and that's what we're sort of working on at the moment. What does suggest that we've got downside here is simply this particular five-wave structure here. I know that's messy, but this is the reason behind coming further to the downside here. So down for one and back for two here. But this correction here that we've been working with over the last 2 days is a bit of a problem here. And in that particular case, if we were going to get a C wave up here, it would be in 5 waves, and it would be up for one, back for two, up for three, and then well, I thought it would have been the A, the B, and the C here, but it appears to get larger than that. So we've got an A and a B and a C here. So that would be the A wave, the B wave, and the C wave to here, and then a push up for the 5th wave here. Now, the 5th wave wouldn't go very far because the extension was in the 3rd wave here, so it would only be quite small, but still, it should take that top out there and would have to peg in this trend line coming through here in the 11.5 again. I hope that's not the case, but we have to bring that into the picture. If we have a look at this on a smaller degree now, this is it here on a 10-minute pattern here, and it would be, I've got, as you can see here, the alternative A wave here, so an A, B and a C for the A wave, B wave in 3 waves here, and a C wave down to here. So that's a possible case. Now, this is where it gets sort of interesting. If these highs here were taken out, so we could say 12.272, which I like, is the last high here, or the 11.3 here. So look, if we do get a push up through here, then we know where we are, and we'll be heading back to that 11.5 area back up here as a 5th wave, and we'd be counting 5 waves up there for that to complete. Now that would kind of fit in with a lot of other markets, like the euro the DAX that's been sitting here. This is the wave count for this here. We've got this nice 5-wave structure coming down for the 3rd wave here, and we've got the A, the B and the C for the 4th here. So the 4th should come back up to the 4th degree of one lesser degree here, and then we've got the 5th wave coming down through here. So that needs to play out, and that's pretty much what's been supporting the UK market as well, the support on here and this factor here. But I just wanted to sort of bring that in to fit into the picture a little bit. So that's a possibility. Now, on the downside, it's still possible as well, but it simply just has to stay under this high here. Okay, so that would be the case for that, and if that was the case, then would be down for wave 1, back for wave 2, and then of the next smaller degree, we would be down for 1, ABC, back for 2, and then once again would be down for the smaller degree, yet still for 1, and back for 2 here. Now, we've had pretty high retracement levels all through this. As you can see here, every retracement level's like pretty high. So there's it's a reasonable to assume that that's a possibility there as well. So we really need to allow this situation to play out in here now. So we're getting very close to deciding, will we be going this way or will we be going this way here? So there's nothing I can sort of say or do much beyond that. I've looked at all other markets, even when I look at the US dollar index here, and this is, while this is going up through here, then the Dow will be weak. If this market drops through the 78 here, then the Dow would be strong at that point. But which will move first, that's another story as well. So I can only sort of come back to the base metals as such. And when I look at copper as being a driving sort of influence for our market, we can see that we've, a bit like the DAX really, we've had we've been having all this move all the way down through here, and I know that we're in a third wave and a fourth wave here. We talked about the coming back to the 350 here, and then we're moving down through here. Now this move down through here does appear to be in three waves, so it's possible that that fourth wave there's not done and dusted just yet. So that can be the A wave to there, that could be the B wave to here, and we'll get a C wave to here, and then we'll come down for the third wave, and then we'll go back for a fourth wave, and then we'll go down for a fifth wave. So it's a fair bit of bouncing going on through here, so it's not really going to help us pull the markets down, but it's going to keep markets in the Asian region down, sort of bobbing along the bottom, so to speak, so understanding what's going on here, what's going on in the European market by looking at the DAX, and then basically narrowing down what's occurring in the US markets, and that's the situation here. So we just need to allow this to play out here. Yes, it will get stuck at 11.2 here, and the trend line through here will be strong as well. So there is resistance there, and we will see the price moving around here today. But coming out of that situation is what we're looking for there. So a move up to the upside here, then we need to cut some of the shorts, and you can even go long at that point there. But being stuck in through here and a move down through here would keep us on track of what we're considering there. So that's about it in a nutshell, really. Just keeping it really sort of simple. As you know, the last 2 days we've been sort of working through this. We just got to allow it to play out. That's all. So that's the same with the UK market as well. It's got that. It's got the same sort of situation. If this had come down much further down through here, then we'd call it corrective. And my bias still is to the downside, but with that lingering ABC correction on the Dow Jones over the last 2 days, it does keep that door open, and that means that we, because the situation is not clear, it means that we need to be very diligent in our trading and our money management, and keep things very tight until we know what's clear. Once we know that if we are going to the downside, then we've got plenty of time to move into all of that. And on our local market as well, we're pretty much looking at it's the same situation as well, the same sort of pattern as well. So we can class this as the A, the B, and the C here, but we can also class it as down for 1, back for 2, down for 1, back for 2, down for 1, and back for 2. So we can count it like that, but we need to be realistic here, and we need to be on the right side of the 4,000 here, the medium level. So very simply put, if the 4,030, the top of Group 1, becomes support, then we would be looking to the upside on that there. But you've got resistance at each one of these levels here, the midpoint at 50 and the subgroup 2 here and this level here as well. So there's plenty of resistance there to pin these down, so just be careful about that. On the short side here as well, the subgroup 2 under the 4,000 here, if the 72 became the resistance, yeah, as a retest, then you can use the 65 in the subgroup 2 here to look at short positions from that point there, and we'll be going to the downside from there. Just that's that what I've done here is I've just labeled it as an A and a B and a C here. Because that door is open, I need to make that sort of clear in that sense there. But that's how we would trade it in terms of subgroup 1 finding support, or the 72 becoming the resistance here. So just be careful in this space here. Yeah, just be careful about that. That's just the same thing again on a 15-minute chart as well, because I've got to go in there and count all the little subwaves in here to make sure that if I can pick up any leads. But it's the same with the Dow Jones. It can go both ways, and yeah, we just have to work within that, allow that to play out there. But be prepared. It's not a matter of being right or wrong. It's a matter of being on the right side at the right time, and you know the numbers there. I've just given them to you, the levels. So you know, build into those trades there. Now, if we are going to go long, then these highs here are going to be taken out. Okay, so that will give you some sort of move on that, but you know it's going to be tough getting support on the 430. It's going to be tough getting support on the 450, because you would trade to the 450, get out, then wait for support on the 450, the midpoint. If you get that, then you move up, but you'd be scaling out at 65, 72 and 80. If the 72 became support, then you can add back in and try and get a bit high there, but keep the pile of cash pretty thin at that stage. Okay, and the US dollar here. With the US dollar here, we know that we've got a top of a structure here. So it just depends on how big this correction is going to be here. That's all. Is it done and dusted here? And we move up from here. That's what we're considering. But like I mentioned, a move under the 78 here puts the US indices in a strong position, and we'll have a deeper correction into this area down here in terms of an A and a B and a C for the B wave, and then a C wave back into here. So we'd be looking for 5 waves down here. We'd be looking for 5 waves up in the US indices, and the opposite to this would be the euro as well. So with the euro there, we would be seeing, if this broke here, come down through here, then we'll see the euro go up, and the euro would go up in line with the indices as well. So we just need to play that out there. So just be aware of that situation there. Now, if we are going to go bearish here, then we straight away look down here at the 132 mark down through here, and this low being taken out. But once again, like the other markets, we need to keep allowing this to play out here, and this is what we've been doing here as well. So it's the same picture here as well. So this is the euro here. So if you're going to go long here, excuse me, then you would need to have support on this 36 here. So if it was going to come up to 36 here, then it would come up, hit it, drop back, then get up through there, have an A and a B and a C correction, and then get back up there. So the classic trading levels pattern up here is what you'd be looking at here. So you just have to work with that a bit like this here. Really comes up, hits it, comes back, gets up there, has a bit of a correction, finds support, and then moves up to the next level, so to speak. So you'd want support on the supply level here, so you've got it there. Otherwise, while it's under here, it's actually weak. This is a retest of 136, and it's a retest of short-term supply here, and that's where it would roll over from. But in shorting this here, then you'd want to be locked under the 72 here in this subgroup 2 area here, and then work the trade down from that side there. This is the daily chart here, and you can see that we do have all of these bars across here are seeing selling here on the closings each time through here. but we're not seeing it done with high volume here. We're only seeing it done with sort of lower volume in comparison to this bar here that's holding that support up there, and this bar here holding that support up there, that higher volume there. So we've got support here in volume, support here in volume, and yes, we are seeing some selling coming in here, but we're not seeing it on high volume. Do you know what I mean? Not higher than the demand is here. So there can be a space for this to move up through here, and the weekly high would be around the 138 here as well. So once again, we've got a battle going on here. And all these markets will move together. That's the key. The euro will follow the S&P 500. And yeah, that's it really. The Australian market here, we were looking at this pretty much just following the copper market as such. And it's also got influence of the indices as well. Now, we understood that this is a nice strong third wave down through here, a little fourth and a fifth here. So we've got this other fourth wave pushing back up through here, and that's fine. Now, with fourth waves, they just like on copper that I talked about, we can have this up as the A wave and the B wave here as well. So we still may see some swings across this level here in terms of the fourth wave before we see any sort of move to the downside. This is the market here in the Australian dollar here in terms. So I'm just bringing this into a smaller picture here. We've got that move down through here in terms of resistance through here from that $1 mark there. That was the retest back there. So we're looking at this here. Now this is more of a corrective pattern. We've got this A, B and C here because it's corrective because we've got this move up here which comes into the price territory of wave 1 here. So we can't have this as 1, 2, 3, 4 and 5 because the fourth wave is coming up into here. It can be down for 1 and back for 2 and down for 1 and back for 2 and then down for 1 and so forth, building into a bigger trend to the downside. And that's what we were talking about with the Dow Jones as well, and also our ASX market as well. So that's a real possibility. But we're also viewing this as an A wave down, a B wave and a C wave with another move to the upside. But in terms of trading here, in terms of scalping, what you want to do is the 98 is the line in the sand here, and that's what you need to work with. So that's the first point. Second point is that we've seen this push up through here, so that would be just normal. That would be like a little 5 waves pushing up through there. So from here we can expect to come into 98 here, but if we consider this 5 waves up, then 3 waves back, and then if it starts to get another 5 up, then that's where you want to start looking at your long positions there. So there's no rush to jump in just here. So this is a 5-minute chart. If you get this down on a sort of 2-minute chart or 1 or whatever, you'll see that start counting the 5 waves up here. So there's probably another little push here to get the 5th wave there, or it may already be in there, but it's definitely the 3rd in there. So that's probably the 1, the 2, 5 waves to the 3rd. This is like the little 4th wave happening here, and then there'll be a 5th here. So there will be a sell-off at the 98 or close to it, and then we'll see an A and a B and a C wave here. If you do see a 3-wave corrective pattern there that drops below the 72 and then gets back up above the 72, then you can get one position in there and then look to build positions on to this point here. But do allow this to play out through here. Of course, if the midpoint here, if this comes up here and just drops straight down through here, then you want to be working with the midpoint for a move lower from that point there, because we're looking at this as being a 5-wave structure down, a retest of 98 and then move down. Now the 9772 here is a really important level, and I would have mentioned this before this all came into play over here. And basically what this market is doing is working closer and like a triangle pattern. Do you know how it sort of diminishes into one point? Well, these are the points that it's diminishing into. So the trade will come from this zone here, the 72 and the 98 here. So that's what you kind of got to figure out. But like I mentioned, things are a little bit unclear. We've got a bias to the downside with everything, but we've got this damn bullish corrective pattern sort of lingering there that could give us another high and get us into trouble. So we just need to be fully aware of that, and that would be the same. This is the S&P 500 here as well. The reason that I think that it's got some bias to it as well, especially from the S&P 500 here, is the simple fact that this has come down under the 150 here, and it's come down, done overlapping structure here. So that's but you need to check that. You need to. I should have checked that myself. But have a look on the cash market to see the S&P 500 index to see if this move down through here has done overlapped. Well, it really needs, technically, it needs to overlap that little wave structure in there, the first little 5 waves up here. So that there, because that would be the first 5 waves there, and then that would be the A, the B, and the C wave here. Okay, so it's that point there that needs to be looked at on the cash market. So that 1,140 is the main point there, and you can see here that it's overlapped here, but it may not have overlapped on the cash market, and that's what you'll need to check to get that correct there. But even overlapping by 1 point would create this as a bearish pattern here. But once again, with the S&P 500 here, if we do see a move back up above this high here, then we've got a bullish scenario coming into play. And really, you cannot be short at this stage. You'll need to be long, but look for good support on the 72 to be long, and then look on the 80 here to be long as well, but on good support at this point here. But in the meantime, while this is rallying up through here, this is rallied on close on some news, so just allow this to play out there. But while it's staying under here, then we can keep to our bearish bias. I'm just concerned about this pattern here being an A and a B and a C here. Yeah, so anyway, that's my concern, and that's where I see it. So we'll just allow that to play out further. Once we've got a bit of a grip on that, then we can be moving either up or down in most markets. Alrighty, well, cheers and good morning and good luck.